5 minutes.
Thank you, Mr. Chair, and to our witnesses. I'd like to start by just pointing out that lengthy proxy statements, as was pointed out by Chair Hill, they're not necessarily an intrinsically bad thing by themselves. You know, if I looked at the 4 companies he talked about where the length of the proxy statements had gone up by several 100%, well, the market cap of the companies involved have gone up by well over 1,000% over the same time period. So it's not necessarily, you know, a trend that's out of scale with the increased complexity and size of their operations. Also, in the future, everyone is going, all of the shareholders are going to do what we're already doing already, which is to ask your personal AI agent to summarize these complex proposals. And they'll look at them in whatever level of detail they're comfortable with and want. And so it will be possible to get, for the average shareholder to make a decision on the basis of the amount of information that they can actually absorb. So I think that same point applies to very complex regulations, where we're going to be able to use AI to tolerate very complex regulations because of the ability to chew through the complexity. I'd also have to say that I am in favor of making some tweaks to this. That, you know, that in particular, when I looked over the list of the requirements to bring forth a proposal, the point that you have to be a long-term holder, I think, is fundamental. I am very concerned about sort of the rise of meme stocks that I have with completely disconnected share price from any plausible future revenue stream from the companies. And that, if I was going to choose what hearing to have, that would be it, because that is generating huge misallocation of capital in our country. And so, you know, and I would put not only GameStop but Tesla in that bin. No, this is not investment advice. I just want to make that clear. Another point is that you know, political ideas have financial impact on companies, and you can't really hide from it. This is, you know, we see that in the company I started 50 years ago that now manufactures most of the theater lighting equipment. When our country behaves badly, you know, we saw this when President Bush got us into the war in Iraq by telling a bunch of our allies things that turned out not to be true, that we found foreigners simply did not want to buy American products. And if you ask yourself, why is it that we're now in our 6th month of manufacturing contraction since the start of Liberation Day? And this is not new. It's a repeat of what happened in the first term of the Trump administration, where his policies put us into a manufacturing recession 1 full year before COVID hit. Okay, so reputational risks are real, and a company's stance on the issues of the day matter certainly to their customers of these companies, and that hits the bottom line. So I think it's a mistake to imagine that companies can hide from these things. And so, let's see. I was interested, Mr. Lander. You referenced in your remarks that actually, if you look at companies that have had some of these, you know, DEI proposals go through, that it hasn't been bad, which is sort of the narrative I'm hearing from the other side of the aisle. Can you say a little bit about the actual research and the numbers here?
Yes, thank you, Congressman Foster. So an independent study, I mentioned something specifically looking at shareholder access to the company Proxy to nominate directors. That came through the work of the New York City pension funds before I got there. And independent analysis found that it added 0.5% to shareholder value at the companies who adopted it, potentially adding up to billions across the market. And separate from that, a group of business professors at the NYU Stern School of Business evaluated 1,000 studies and found that 58% showed a positive relationship between environmental, social, and governance efforts and corporate financial performance. 13% had neutral outcomes, and only 8% had negative effects.
Yeah. So then, however, I think that there should be maybe some adjustment of the threshold by how significant an issue this is for a reasonable number of the shareholders. And are there simple tweaks? Yes, Ms. Keel, maybe if you have, are there some simple tweaks to simply increase the threshold so you have to make sure this is a major issue for more of the shareholders?
Sure. I mean, I think that would be the kind of easiest and most straightforward, right? To make sure that somebody who's submitting a proposal has the as Mr. Copeland said, an economic skin in the game to make sure there's an alignment of interests. So that would be, I think, the simplest. But I think there are other ideas too, just about the resubmission thresholds, thinking about whether or not significant social policy should be something that the SEC is deciding, or is that something that a company should be thinking about? Because the reality is that they're actually already thinking about all of these political issues, the tariffs, et cetera. They're thinking about those issues deeply in the boardroom before these proposals even come about.
Yeah. And so I think that also strengthening the whole.
Gentleman's time is up.